What's up, guys? Another lightning fast video covering, in this case, just the market. So starting with the Nasdaq, this huge move up has really caught me by surprise. I don't know anyone who predicted this kind of move, let alone Friday's close, high of day. I mean, they're all the same. This is the Nasdaq. You can see it was flushing. It was going down according to plan as rates kept on going up. And okay, it's true, rates declined a bit. A lot of the majority of people think the rate hikes are on pause, at least, maybe indefinitely. Maybe they come down soon. But I'm still of the opinion that rates being where they are, even if they come down a tiny bit, but just staying roughly where they are is way too much for the economy to handle. So I still think the market needs to come down. But this is just incredible. So Nasdaq closed a high of day. If we look at the S&P, taking out this descending, I mean, they've all kind of, at least the S&P and the Nasdaq. Okay, here you can see the S&P is just about there. But, look at that strong close. But when you compare it, okay, the Dow also pretty good stuff. The descending is probably about there too. However, what I want to bring your attention to is the Russell. I mean, that's obviously the outlier. So for me, S&P, Dow, Nasdaq, it's the same big blue chips, the Magnificent 7 or 10 or 15 or 20. But otherwise, the other 400 stocks, that are in the Russell, the sort of the smaller ones, the small caps, real America, let's say, those ones are not doing so well. And what happens when the market drops? Because obviously we're going to retrace. You don't just go up in a straight line, although we have gone up in a straight line. When the market retraces, the Russell will pretty much very quickly, fill this gap and probably test its 163 low. And if not, maybe even make new bear market lows. You'd have new bear market lows in the Russell, whilst the S&P is just sort of retracing and filling in one or two of these gaps and then heading back up. And again, it's those big, big names that are doing all the heavy lifting, whilst all the others, they're near their 52-week lows, whilst Microsoft, Apple, and the usual suspects go up. So it's really strange. It's this increasing inequality between the magnificent 7 or 10 top 10 names that make up the biggest moves in the index, whilst all the others are just hovering near their lows. And it's just a strange economy. I mean, the stock market is so dislocated from the economy, but it can't bode well long term. I think rates are going to stay higher for longer. Even if they don't raise again, they're going to stay where they are. And watch out. And by the way, the banking sector that I think is still extremely fragile for the same reasons, the rates. I mean, okay, the seniors, they rose quite well, KBE. But look, what happens when the market starts to drop a little bit, like the Russell? These things could start testing their prior lows, and they're pretty much near their all-time low. I mean, their 52-week lows, the bear market lows, compared to, the Nasdaq and all that. So watch out with the Russell, watch out with the banks. Meanwhile, the usual suspects are making 52-week highs and testing this upper range. It's just something to worth paying attention to, because it's not going to end well. So those are my thoughts on the stock market. Very impressed by the move, very impressed, caught me by surprise. But there's still something going on with the Russell and the banks, and maybe something will come. I still think a banking crisis, one of the big names, maybe, or at least a couple of regional names. But something's going to go wrong in the banks. And I think rates are going to stay where they are, at least for longer than people think. And I don't think the market has anticipated that. So just because the rate hike may have been on pause, it doesn't mean the economy and the stock market can take it where it is for that much longer.